Welcome to How to Retire on Time, a show that answers your questions about all things retirement, including income, taxes, Social Security, healthcare, and more. This show is an extension of the book, How to Retire on Time, which you can grab on Amazon or by going to www.howtoretireontime.com. My name is Mike Decker. I'm the author of the book, How to Retire on Time, but I'm also a licensed financial advisor, insurance agent, and tax professional, which means when it comes to financial topics, we can pretty much talk about it all. Now, that said, please remember this is just a show. Everything you hear should be considered informational. That's it. It's not financial advice. If you want personalized financial advice, then you can request your wealth analysis from my team today by going to www.yourwealthanalysis.com. With me in the studio today is my esteemed colleague, Mr. David Franson. Thanks for being here.
Yes, I'm glad to be here.
And David's going to be reading your questions as they're submitted, and I'm going to do my best to answer them. Now, you can send your questions in by either texting them to 913-363-1234. Text them anytime during the week, 913-363-1234. Or you can email them to heymike@howtoretireontime.com. Let's begin.
Hey, Mike, I've got a couple of old 401ks that I have neglected over the years because I don't know what to do with them. Any tips?
Yeah, so as a whole, 401ks have fees. Many people don't realize how high those fees are. Even if you leave a company and you just leave your money in the 401k, they're still charging you fees. Now, I want to be fair, if you move that into a professionally managed portfolio from like a financial advisor like ourselves, there are going to be fees there as well. So
Okay.
I don't want to say that all fees are bad, but if you're just letting it sit there, you can roll over a 401k at any point in your life into an IRA. It's called a like-kind transfer. And you open up an account, Vanguard, Schwab, Fidelity, wherever you want. And you open up an IRA account or a Roth account. Then you contact the 401k itself and you say, I want to roll this over. And they'll say, who are we going to send it to? Do not have it sent to your personal account. As in, you don't want to have a check made out to your name. And then what they'll do is they'll write a check out, they'll send it to Schwab, or they might send it to you, but the check will be made out to Schwab, FBO, for benefit of, and then your name. You don't cash it, you don't sign it, you just drop it off or mail it to the custodian or wherever. And your 401k will help you with this. They know how to do this. And then just buy the same mutual funds or ETFs that you had. You're paying less in fees, which means they can grow if you want to DIY it. And if you want a professional portfolio, I would recommend if you do a professional portfolio, do it because they're actively managing it, as in actively trading it. I don't think it makes sense to charge an asset under management fee, like a 1% fee on something that's just sitting there, right? You're buying and holding a bunch of stuff. You could do that on your own. Maybe get a Morningstar subscription to research some of the good mutual funds or ETFs that are out there. Also, you need to consider this too. If you're before the age of 59 and a half, if you put the assets in an IRA, you've got more options than a 401k. 401ks are limited on the options. The world's your oyster on what you could be buying in there.
And so a couple of questions. Why are there more fees in a 401k and why are the options limited?
So I'm not saying there's more fees. There are fees to be aware of.
Oh, okay.
Because it's comparative, right? Who are you going to go to? So the 401ks have all these administrative things to do.
Yeah.
So they charge fees because they're working. It's not greedy. It just is.
Right.
But if you roll it over into an account, let's say professionally managed, they're going to charge you 1% or whatever on the assets in there. Or you could go to a different company that says we don't charge anything, but they make money from kickbacks from mutual funds that they offer.
Oh, okay.
So there's a company out there, I won't say who, that will say, well, you don't buy stocks, you buy mutual funds through us. It's because that's how they get paid, which is fine.
Sure.
It's just not often understood. But you could open up your own account, buy ETFs, which have low fees. They're based in the market, and you could do it yourself. But you could also explore other options, like you could do a self-directed IRA and buy gold in there. Don't go all in on gold, but it's an option. You could do a self-directed IRA and put real estate assets, or if you're qualified, you can explore the alternative investment space, specifically real estate in there. You could just buy ETFs and just let it grow. You've got more options though through rolling it over. So I'd recommend, and this is my opinion, to not roll over an old company 401k into a new 401k. Roll it over into an IRA. So you're either managing it yourself and not paying fees, or you find someone that can actively manage it like us at Kedrick, to where we can try to grow it more than if you just would have bought and hold a standard portfolio. Or you can explore other investment options that may not have been available to you if you would have kept it in the 401k. The world's your oyster. You can do this on your own. If you want help with it, we can help you too with it. Just get a hold of us. But overall, when you kind of ignore things, it typically ends up creating an inefficiency. So we want to be very deliberate and organized with our assets. Now, if you have old 401ks, you want to look at your investment options, whether it's looking at self-directed IRAs, real estate, gold, just a self-managed portfolio, or a professionally managed portfolio with actively managed models like what we do here at Kedrick. If you want to explore those options, we're happy to do it with you. It just needs to make sense from a comprehensive standpoint, as in what you're doing needs to make sense from all the other strategies you've got going on. We want to help you get rich, and then we want to help you stay rich. That's all the time we've got for the show today. If you enjoyed the show, consider subscribing to it wherever you get your podcasts. Just search for How to Retire on Time. Discover if your portfolio is built to weather flat market cycles, or if you're missing tax minimization opportunities that you may not even know exist. Explore strategies that may be able to help you lower your overall risk while potentially increasing your overall growth and lifestyle flexibility. This is not your ordinary financial analysis. Learn more about Your Wealth Analysis and what it could do for you regardless of your age, asset, or target retirement date. Go to www.yourwealthanalysis.com today to learn more and get started.